So we have what could be a huge inflection point for the markets coming up tomorrow after the bell. That's Nvidia earnings. How are you looking at this inflection point? Are you positioning ahead of it? Are you waiting to kind of see what happens afterwards? How do you see this?
Well, all eyes will be on Nvidia tomorrow. That's for sure, Frank. Even in days when Nvidia doesn't report, the headlines seem to affect semiconductor chips and Nvidia in particular. I think it's interesting to gauge where the market is on this one because Nvidia, frankly, the stock is where it was last June, right? So you haven't had this big run up into earnings that we sometimes see. Of course, there's been a long trend there of Nvidia kind of blowing out earnings despite the high expectation and the move higher in the stock price. Right here, you're seeing a stock that's down year to date, down today, flat for more than 6-7 months. And yet the expectations are there for kind of north of 50% revenue growth. So there's certainly room to disappoint. There's a lot of expectations built into Nvidia stock, but also that broader chip complex and the AI build out. So we'll be watching closely in terms of portfolio positioning. I think we're a little bit more defensive right here. I mean, we want to be in stocks. We're in capital appreciation mode, but we're our heads on a swivel.
All right, you're kind of defensive. We're just hitting on some of the Mag 7 weakness. That used to be a defensive play. I also just want to talk to you about momentum in the market. We've seen a big shift in momentum. We're going to show the one-week moves of some momentum stocks, including Palantir. I'm looking at the chart. I'm shocked by this one. Palantir actually down 25% over the last week. Walmart down almost 10%. Goldman Sachs, another momentum name, down almost 7%. What do you make of this big shift? And we're talking about momentum.
Well, the market is clearly paying attention to some of these headlines. I mean, in many ways, the tariffs may act as a tax. They tend to slow down potentially inflation, but everyone's trying to assess what this means for profitability. And the consumer is really, not all in right here. I mean, we're seeing some strength still in the labor market. We know that GDP, we're not really flirting with recession levels, but you start to take a little bit of air out of the economy and a little bit of a slowdown in the consumer. The Fed, kind of pausing their more accommodative stance, inflation being sticky. And those momentum stocks, they do pay a price. I mean, they benefit the most on the way up. And right here, the market is kind of recalibrating and saying, look, maybe defensives, maybe some kind of small cap value, some international names. A Palantir sell-off like that is interesting, but you step back. For many of these stocks, you can look at, some period of time where they're up 50%, 100%, 200%. So you kind of have to take some of that volatility in both directions when you play these momentum names. And right now, the market is saying we want more stable, more cash flow, more value type names.
Coming up later today, we also have an economic report, the second reading of GDP. These economic reports, they seem to become, sometimes they're important, sometimes they're not. Obviously, the consumer sentiment report on Friday had a big impact on the market. What are you expecting out of that? The estimates for 2.3%. Are you expecting us to hit that? Are you concerned at all about the impact that this could have on the market ahead of, again, what could be another inflection point tomorrow with Nvidia?
So what's really interesting, Frank, is that the underpinnings of the economy still look strong to us. I mean, I think we'll still see low but positive GDP growth, a labor market that's still strong, inflation, being sticky, but not exactly spiking back to anywhere near the levels we were at, a year or 2 years ago. So we would expect a kind of sound GDP report that does keep us, as I mentioned earlier, in this capital appreciation mode. I mean, we still want to own equities. We just need to be really careful about what we own. I think that plays well for active managers. I mean, it's amazing that Nvidia's earnings report is probably more interesting right now than the GDP report, but that's kind of the market we're in.